I was muted. There we go. If you're watching this thing live, which we are live right now on YouTube, I hope you're having a great day. But is Jerome Powell about to crash the market? That's the magic question here. So what I'm going to do is if you're watching the replay, I want you to fast forward about 1 minute. I'm going to throw some music on here. We're going to get the word out about this stream, and we're going to kick this thing off. So enjoy the music. And is Jerome Powell going to crash the market? We're going to talk about it here today. In 10 minutes, he'll be literally live. Let's get the word out. Feel free to send this to a friend that wants to know what's going to happen next in the crypto market. Here we go. Starting here in 1 minute. If you're watching the replay, you can fast forward 1 minute. Hope you're having a great day in the chat. Let me know where you're tuning in from. We just had a rate pause. Let's break it down what I think is going to happen next. You're going to watch Jerome Powell's speech live here in just a second, starting in 30 seconds. You're watching the replay, fast forward. Let me know in the chat where you are tuning in from. All right, let's get into it. How's everybody doing? Welcome to the stream. Excited that you're here. My name is DeFi Mike Sotero, whatever you want to call me. I don't really, it's all good. I've been in this space of crypto since 2017. Soon it'll be 9 years coming up in Q1. And I'm excited that you're here. And if you're watching the replay, let me know by hitting that like button. If you're watching live, you can hit it as well. We just had FOMC Fed funds rate. Okay, this is the rates that the banks, borrow from each other. We have just received brand new data that we are pausing rates once again. And if you are new to trading or investing, it doesn't matter what you do, your profession, your job, these numbers all affect you. They affect your buying power, which is going down. They affect what happens to the dollar. And if you live in a country that uses euros or yen or pesos, what the dollar does affects you. Now, here is a really good summary that I found. And we're going to hear from Jerome Powell here in about 7 minutes. So we're going to be watching it live on this channel. We're going to have some fun in the chat. We got the super chat stickers, things in the chat if you want to help the channel, all that. So here is some of the summary. Okay, number one, the Fed halts rate cuts for the first time since July of 2025. Fed says inflation is somewhat elevated. Now, according to Truflation, inflation is at 1%. I think this is going to backfire, and this is going to be asked in this press conference that Jerome Powell is about to do. Number three, the report came out that 2 Fed governors were in favor of cutting rates. So remember, it's a committee. Jerome Powell is the chair. He's the head of the Fed. And we're going to talk about in just a second who could be next when it comes to that. Number 4, unemployment rates have shown some signs of stabilization. I think this becomes an issue and a norm that unemployment is going to be much higher than it is today. We'll talk about that. Number 5, Fed reasserts goal of achieving 2% long-term inflation. And then number 6, uncertainty about economic outlook remains elevated. So they're still concerned about a market crash. And in the meantime, the S&P 500, I just saw the White House post this. The S&P 500 just hit 7,000 points in history for the first time in history. For those that are trading here, 7,000, okay? If you were here for times like COVID, right? What does Meek Mill say? I remember times like this, times like that. I mean, I remember we had just hit 3,000. Okay. Pre-COVID, 3,000 all the way down to 2,000, and now we're at 7,000. So give me some sevens in the chat if you're holding some stocks, you got some ETFs, We don't just talk about crypto, or I don't just do crypto on this channel. And hopefully you're subscribed down below and you hit that like button so you make sure you're plugged in. But hopefully you're taking advantage of all of these different markets. Okay. And we're going to hear from Jerome Powell in 5 minutes. I'm expecting some volatility in the markets. But according to Trueflation, inflation is down. Okay. Now we are going to have, okay, tomorrow unemployment claims again, PPI on Friday, and next week we go into unemployment rates and NFP. Now this is what the concern is, right? They're saying that it's stabilizing, but I think unemployment continues to tick higher, which it is. Now the Fed's goal, okay, Jerome Powell, just so you can put a picture to the name if you've never seen him before. Jerome Powell, right? Their mandate is to keep inflation low and unemployment low. Now, there's going to have to be a trade-off here. I don't think both get done. And then you have people like this, okay? Because of the economic situation, the dollar, right? The DXY. And I have videos on my channel where I've talked about the dollar dropping, probably going into the 80s. You can go look historically when there's certain types of presidents. So for example, right now we have a Republican president, dollar drops. Seasonality is dollar down. Democratic president, which was what we had, that came in right here at the bottom. This is also the environment where rates went up. Rates going up, Democratic president, quantitative tightening. Guess what? Assets did not do well. Some still went up, of course, but overall assets, right, didn't thrive and the dollar went higher. Now, guess what? We are in the opposite environment. Republican president, dollar down, rate pause and rate cuts coming. I thought I had it up here. I'm gonna actually look for this real quick as we watch this video. Okay, so then you have people like Peter Schiff. This guy loves gold. How many of you guys are holding gold? I love everybody's talking about gold and most people have none of it. Let's listen to this quick video. I'm going to find one more thing here for you.
Pulling the rug out from under the U.S. The dollar is going to collapse. The dollar is going to be replaced by gold. Central banks are buying gold to back up their currencies. They're getting rid of dollars. They're getting rid of treasuries. We are headed for an economic crisis, again, that will make the 2008 financial crisis look like a Sunday school picnic. The biggest difference between the crisis that we're about to have and the one we had back then is this one is all in America. It's not going to be exported to the rest of the world. It's not a global financial crisis. It's an American.
What do you guys think? So he's saying that the U.S. economy and the U.S. economy will be in a recession, basically, and other economies won't. I don't see that. I don't see that panning out. If the US goes into a recession and the dollar dies and goes to zero, then the whole world is screwed. Well, what if there was a currency that's limited? Right? What if there was a currency that had some demand called Bitcoin behind it? And this guy hates Bitcoin. He thinks that the dollar is going to be backing gold is going to back the dollar again after Nixon took it off. I don't see that. I don't see a world that we live in. Some of the biggest gold buyers right now are companies like Tether. And when the dollar does drop, though, okay, remember the dollar, okay, the DXY, if you're taking notes here, okay, the DXY, and then gold and silver and crypto do the inverse. Most times, right? So when dollar is going down aggressively as it is, the fortune is gold to go higher, and gold probably goes to 8 to 10,000. Very possible for gold to go to 8 to 10,000. Now, what is not moving right now? Crypto, Bitcoin. All my students know some of the levels that we've been looking at buying. I've talked about it on this channel so many different times. Like, there are some key levels here for BTC where we could still revisit. And I've put out a video recently talking about some Bitcoin predictions. Make sure you go on the channel and watch it. But we could still revisit sub 80,000. Okay, we're not out of new liquidity ready to go into crypto yet. You can see a lot of money is flowing into Bitcoin and into Ethereum. Now, tomorrow we have some really, I'll just show this to you real quick. and then we're going to jump into Jerome Powell. He's about to take the stage. I hope you're ready. Send this to somebody right now. We're about to watch Jerome Powell take the stage. But tomorrow we have the new chair of the CFTC, the SEC chair, Paul Atkins, doing a press conference tomorrow to talk about the future of crypto. Jerome Powell's taking the podium. Here we go, ladies and gentlemen. Good afternoon. Here we go. Send out the link.
Good afternoon.
Can you guys hear it?
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of.
We have got to the point where literally anybody can build a fully working.
A decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
He literally said nothing. Here we go. Let's ask some hard questions, people.
Chris Rugaber at Associated Press. Thank you.
Let's go.
I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timrose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike.
Of course he's not going to answer that question.
Michael McKee from Bloomberg Radio TV.
We're going to break that down in a moment.
Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
That sucks.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something there's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the U.S. currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But, I mean, what's your view on the market movements? I mean, what do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Market should fall here. Crypto should drop right now.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market and the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the beige book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing,
you won't answer anything
haven't
today.
made. What we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated.
Okay.
So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy is significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course no one knows with any precision. So you had a follow-up.
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, the Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira.
I got one more question, and then we're going to jump into the charts.
To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. we're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook and all that. And, we're in a position where, we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the two goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2% x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge, or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard.
All right, guys, we're going to look at some of the charts. The last question was a great one to leave off of. The gentleman asked, would you work with the new Fed chair that Trump is going to appoint? Now, in May of this year, Jerome Powell is out. And according to Polymarket, there is a new front runner in who could be the next Fed chair. And I'm still doing some research on this individual, but I'll give you one tie that he has. His name is Rick Reeder. Okay. Actually, some pretty good candidates here. Kevin Warsh, Christopher Waller, Kevin Hassett, Scott Bessent. He's the Treasury Secretary right now. But Rick Reeder, let's just do a simple Google search here. Who is Rick Reeder? And I want you, when you see it, okay, when you see it, let me know in the chat. What company does he work for? Or did he work for? Rick Reeder is an asset manager and CIO of Global Fixed Income at what company? BlackRock, managing $2.4 trillion in assets in 2026. And now he's the potential front runner. And if you haven't seen this documentary, it's called Goldman Sachs Mafia. This is like your homework here today. Go watch this video. Called Goldman Sachs Mafia by Jake Tran. It's 1.7 million views. And basically it really shows the lobbying that happens in the banking world. All of these people are going to be pro-crypto. They're all going to be pro-crypto. They're going to cut rates. My concern is that they cut rates maybe too fast and it leads to a large correction. So that's kind of why you got to be very aware that we could easily see lower prices on everything, especially in crypto. And I was just really thinking about this. Gold, okay, is at 5,300. Let me ask everybody a question here in the chat. Who here, okay, is selling Bitcoin to buy gold right now? In the chat. Who right now is selling their Bitcoin at 87 or 89,000 to buy and to FOMO into gold? Because right now people are FOMOing. This is euphoria. Welcome to euphoria. Sideways market, breakout, comeback. I mean, every pullback gets bought up. Welcome to euphoria. And it's probably going much higher. But who's selling their crypto and buying gold right now? Let me ask you another question. Do you think people will sell their gold to buy Bitcoin when Bitcoin goes absolutely parabolic at some point, I think this year? Do you think people will sell their gold and sell their silver to buy Bitcoin and to buy crypto after getting insane returns on their money, and crypto still hasn't had that big boom? This, and I'm trying to like remain calm about it, but this flippening or this conversion or this rotation, excuse me, rotation is the correct word. This rotation will be what we all want. And if you're patient enough, I think you'll be rewarded this year. Okay. Now, a couple questions I saw in the chat. Maybe I'll do a video on this. Let me know in the chat. But the Fed was founded in 1913. Okay. President Woodrow Wilson signed the Federal Reserve Act. And there was a really big crash with banks in 1907. And they thought it was a good idea to create a private entity. Okay. The Fed is not a part of the US government, but a private entity that would control money supply, essentially, monetary policy. And Jerome couldn't even answer that question, which was so funny about the Trump, who's the Trump's going to assign, but also the dollar's tanking. You want to comment on it? And according to his mandate, he won't comment on a down dollar. Now, for those that trade currencies or for those that are going to be traveling overseas, this does affect us, right? I have dollars. We're losing value. We're losing buying power. So what option do you have? I believe there's more risk right now, and I'm not going to go do a whole speech on this, but there's more risk right now of not investing and not buying. I'm not saying to buy gold and silver. I'm telling you right now that in 2026, you should be buying crypto. You should be 100% have some sort of budget or allocation into crypto. Which cryptos? I'm not going to cover that in today's video. All my students know which ones I'm personally buying and at exactly what prices. And also stocks as well, right? I've covered this on so many videos, so I'll do it here today. The PayPal former president this morning was on a stream talking about Bitcoin going to 1.5 million. And if you don't own Bitcoin, you're probably dumb, essentially is what he said. PayPal is one of my favorite plays. I've been buying in the 60s. I think I'm averaging right under 60 bucks. And I will continue to buy this dip. And even if we take out this low, right, I could see this as going, maybe the lowest I could see is 40, but I'm buying here. I'm buying a little bit of PayPal every couple of dollars as it drops. And we might even look for a call option on this if we can actually hit 50 and fill this little gap over here. So here's the point, is that people right now, they are doing this. They're working so hard to make more money, right? And what's happening is, let's say they're actually saving money. This is them saving money, right? Put a 1 in the chat if you were taught when you were growing up to save money. We've all been taught that. Save for a rainy day, and then a hurricane shows up, right? Save for an emergency, and then emergency shows up. But guess what? Let's say you actually are saving money. And this right here represents your buying power. Your buying power. The money that you're saving, that you're leaving in your bank account earning 1%, your buying power is decreasing. The inflation every year compounding is just getting worse, and that's why the cost of things go up. Maybe you don't have to believe me. Let me show it to you on the Fed. the Federal Reserve website. Let me show you something real quick. According to the Federal Reserve Bank of St. Louis, Fred, that's your buying power. Consumer price index for all urban consumers. We've all been told this lie that if we just work hard and save the money and just stack up, we'll be able to afford things. The average person in America right now is not buying a house until they're 40 years old. What could go wrong there? I believe, right, you might have heard this quote where it's like, we'll have a nation of people that own nothing. Now, owning nothing is not a terrible thing if that's what you want in your lifestyle. So I'm not against that. But most people aren't even going to be able to afford it. At household income, even if it's at 100,000 between two people, they still can't even afford to buy a home right now. A little bit to do with rates, a lot to do with things costing more. Okay? And the last thing I'll say here, and really why that press conference had a lot of heat and a lot of tension, is because, probably Trump got the Department of Justice to sue Jerome Powell because of the lies with the Federal Reserve's new building, saying it was going to cost one price, and then, now they needed to print more money to have a nicer building. But guess what? This guy is out of office in May of this year. So guess what? Let's refresh this. This is where you can see cmegroup.com, the probabilities for the next meeting. There is 2 meetings left that Jerome Powell will be in charge of, right? That he'll be the leader of. We get to see him 2 more times. The transition happens in May, and then the first meeting will be in June. April, May, June. And right now the market is pricing in 50% about for a rate cut. The report came out in December when the Fed put out that at that moment they were going to cut rates 1 time this year, 1 time next year. If that starts to turn into a rate cut party too fast, we could be in a very turbulent time. Now, cheaper money long term is not a bad thing, but we're going to have to see how this market reacts. And I think it will react when we have a lot more certainty exactly who this person will be. They'll start talking on maybe podcasts or tweets, and they'll start maybe to even give their game plan, and maybe the market prices that in. And that's why I think at any moment, okay, we'll look at Bitcoin here and Ethereum, and then we'll wrap this thing up. And if you got any value from today, make sure you hit the like button. It costs you nothing. It means everything to me. And the subscribe button, and I greatly appreciate it. That's why at any moment here, right now, the monthly on BTC, that does not look good. That is not a bullish close right there. But if we can clear, right, if we can clear that level, I think we flip and we run. Okay? And all eyes, and I put it in the video on my page, but all eyes, in my opinion, are on 200,000 plus for BTC. I think we go well above 200,000 when this next run takes place. The question will be is, do we go back into the low 70s first? And if we do, will you be ready? If Solana goes under $100, will you be ready? If XRP, and for all my students that are watching this right now, look out for a trade here on XRP being sent to your phone here soon. But will you be ready? If this thing made its way back into this area down here, would you have some capital to buy? Okay, we are in a great time in history to be investing, to be trading, to be learning, to be studying. And these moments don't last forever. Like you look at gold, like gold consolidated here. Oh, whoops, wrong level. I was not born there. But just recently, right? This was 2020. Gold went sideways here. Imagine saying, oh my God, it's so boring, and selling when it dropped. And then it goes from 1,600 to 5,300, and that's a, 200+% move for an asset that we continue to find. It's not fully scarce, but it's a safe haven currency. And a lot of people believe that we're going to go into a recession because The last time gold and silver did this, we went into a recession. We're not in the same market. Yes, there's fear, but you're witnessing euphoria in gold right now, where people are selling stocks. They're selling everything, and they're buying the top of this market. Do you see a situation of going into stables and when? Well, yeah, I mean, you're always in a situation where you're looking to go into stables when the market goes up if you're in a crypto. But right now, we are not in a situation of getting out of our crypto. I'm not getting out of my crypto. I'll sit. If everything dropped 50%, cool. I will just buy more because I know that we will see a $250,000 Bitcoin in this next, maybe this year, maybe next year, in this next 3-year window, which means I believe everything will elevate. And gold and silver are just giving us, they're starting the market. They're starting the, hey, maybe we should invest. It's starting that conversation for everyday people, for retail. Okay. With that being said, I hope you have a great rest of your day. If you haven't gone to my website, everything is completely free here. Go to programs. I did a course called Prepare for Market Euphoria. The Investor's Compass is a book I wrote, and the book that tens of thousands of people have read, The Tokenomics Blueprint. You could also go to DeFiEbook.com and read a copy of this. We may or may not be doing a version 2 of this year with relevant, up-to-date info. I wrote this when Bitcoin was at 16,000, and it's 100% free. So go. I put the link in the chat. Go read that if you haven't. And if you're on my newsletter, I'm sending 1 email a week. So make sure you check your emails on that. Guys, have a great rest of your day. God bless you. I look forward to seeing you soon. And if you have any questions, feel free to reach out to me via Instagram at DeFiMike. And share this live with somebody